Today we're going to talk about how to fill out the W-4 when you get a new job. This is a question that we had by a viewer, and if you have questions, be sure to leave them in the comments and I'll answer them in future videos. If this is your first time at our channel or you haven't subscribed, be sure to click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner with Sickle Hunter Financial Advisors. I'm going to put this up on the screen in just a minute and walk through the online version of the W-4. I'll also put the link at the bottom so you can follow along. Now, the part that I'm going to point out, I'll point it out. This is going to make a huge difference if you're changing a job and it's not January 1st. This is going to change how you fill out the W-4. Okay, so let's put this up on the screen and let's look at this together. So here at the top, fill out whichever applies to you, whichever tax filing status that you apply for. This is what you're going to check off. I'm just going to check off single to make it quick and easy. Can someone else claim you as a dependent on his or her tax return? No. Let's go to continue. So if you are single and you only have one job, that's probably why you're here. So just make sure at the very top, we're going to leave it as one job. That's one job right there at the top, right here at this checkbox, number 1. That should stay the same. If you have any child or dependent care credits, go ahead and check them off, child tax credits. I'm going to skip over the second section right here and just click on continue. Now here is where it's important to understand when you change a job and it's not January 1st, because this is where it's going to make a little bit of a difference. So first we're going to put in, enter the gross wage, salary, and tips you expect to receive in 2018. Why is this so important? If you are on a $40 or $50 or $60,000 a year job, understand that's a year. That's not for the rest of 2018. So you need to make sure you're doing the math based on what you're going to earn for 2018. So if it's July 1st and you're making $40,000 a year, it's only going to be $20,000 for 2018 because you just started this job July 1st. If you've had a job previously, there was probably a W-4 attached to those payments and you've withheld. So this is only looking at the job that you have right now. If you have multiple jobs right now, again, it's going to be a little different. What we're focused on here in this video is looking at if you changed a job or if you have a new job and it's not January 1st. This is the page that I want to focus in on. So again, it's enter the gross wage, salary, or tips you expect to receive in 2018, not per year. This is where most people make the mistake right there. So let's say that we just put in $20,000, no bonuses, and nothing so far this year has been withheld, and nothing in our last paycheck. Here's important step number 2. Important step number 2 is right down here. How often do you get paid? We're going to go ahead and put twice a month. This is it right here. Select the date closest to when you first held this job. So let's just say that it is May 1st right here until the end of the year. So we're going to make $20,000 for the rest of the year. Let me stop right here and just talk about this for a second. Let's say that you have received 2 or 3 or 4 paychecks, but nothing has been withheld, and you still have expected to make $20,000 over the course of the year. Whether or not I put May 1st or whether or not I put January 1st, my tax withholdings are going to be exactly the same. It doesn't matter. It's just estimating how much should be withheld from each paycheck moving forward. Now, it's going to assume, the app is going to assume if you started earning that $20,000 over the full year versus half the year, it's going to assume that you've already made that money in those paychecks. So if you ran it both ways, your withholdings will be slightly different, but the total amount withheld will be the same. Let me run through both examples so you can understand what I mean. So if we put what we put originally and we put May 1st to December 31st and we're going to make $20,000 and we go continue, you can see right here that for 2018, our tax liability is going to be $803. It says it right there in the first line. Down here, it says we're going to put 3 allowances. Now, let me back up for a second. Let's go back to this page and we're going to put January 1st. Everything is going to be the same, except I'm going to make the $20,000 over the full 12 months. So look up here. It's still $803, but my allowances dropped to zero. The reason that is, it had to make an adjustment to the amount that has to be withheld from each paycheck, because if I made the $20,000 over a greater period of time, it's going to assume each paycheck is smaller. This is the benefit of using the online version. It's only an estimate. The objective is to get as close of an estimate as possible so you can make sure that the correct amount of withholdings are coming out of each paycheck. So at the end of the year, you don't get a huge tax surprise. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.